Hello, everybody, and a big warm welcome to you. My name is Deborah Young. I am the CEO of the RegTech Association. We are headquartered in Australia with a global membership of 150 RegTechs, regulated entities, and corporate intermediaries committing to accelerating the adoption of RegTech. I'm absolutely delighted to have been asked along here today with a fantastic panel that we have for you. Today we have more than 91 countries represented and a very diverse range of delegates. At our panel briefing session a few days ago, there was no shortage of things to talk about on this topic, but like all good things, we've got a lot to pack in a very short time, and it's my job to keep on that time and get the best out of this fantastic panel. So it's my pleasure to allow each of the panelists to use about 30 seconds to introduce themselves one by one, tell us a little bit about their background and their current roles and responsibilities, and that will help set the scene. And then I'll talk through the three main themes that are going to underpin our discussion today. So I might start with Rajeev Chib from Citi in Hong Kong. Hi, Rajeev. Could you give us your 30-second introduction, please?
Thank you very much, Deborah. It's a pleasure to be on today. So I'm with Citibank here in Hong Kong. I've been with the bank on and off for 17 years, in the industry for 25 years. I'm the Asia Investor Sales COO and looking at the client franchise, very much involved in a lot of regulatory initiatives, as well as working very closely with technology partners, both within the firm and also a lot of the RegTech and FinTech individuals. I'm also a member of the FinTech Association of Hong Kong.
Thank you very much. Jenna.
Thanks, Deborah. So my name is Jenna. I'm co-founder of Fort Ninja. So we look into cybersecurity and also a bit of talent capacity building. And I'm also part of the FinTech Association of Malaysia, RegTech Chair and Committee member. I used to be a lawyer, and I was also driving digital economy for Malaysia. So I work with a lot of regulators quite a bit in my past experience. Thanks, Deborah.
Thank you. Rajesh.
Good morning, everyone. Thanks, Deborah. I'm Rajesh Mirjankar, Managing Director and CEO of Infosoft Technologies. We are a company that's been in the business for 25 years now in banking for building banking solutions. And the reason I'm here is we also are a market leader in the RegTech solution space with implementations across 46 countries. My role in the company began with the innovation side, and I gradually stepped into management. And now I head the operations for the company. So yeah, delighted to really be here and address a few queries and also provide my views on the RegTech paradigm. Thanks, Deborah.
Thank you. Thank you very much. Benedicte, welcome.
Hi, everyone, and thanks, Deborah. So I'm currently the head of the Hong Kong Center of the BIS Innovation Hub. That's a new role for me. I only started a month ago. And before that, I was in the banking sector for a long time, so in different roles, but always a crossover of risk, regulation, and compliance. So for me, it's that kind of meeting of those worlds. And I think that's what we will be talking about.
Thank you. Thank you very much. Yes, indeed. And so the question that we have to answer today is RegTech in APAC, and how is the financial institutions' relationship with startups being redefined. So I thought it'd be useful really quickly for me to set the scene a little bit before we dive in with the panel. And that's actually just to define RegTech a little and provide you with some data as a bit of a backdrop. So we would, RegTech defined in a financial services frame includes, but isn't limited to, risk analysis, reporting, monitoring, verification, regulatory analysis, implementation and governance, and marketing management. And that's across a very broad range of things such as digital ID, financial crime, conduct and culture, product and marketing compliance, people compliance, and so the list goes on. With banks spending upwards of $270 billion a year on compliance, This is obviously, RegTech is a hot topic right now. The RegTech industry is estimated to be by 2024 a $127 billion US market. So this is a fantastic opportunity for RegTech to serve regulated ecosystems, get trust at scale and build financial resilience. And if we just look at money laundering as an example, it's considered to be, it's considered that the scale is actually hard to quantify. But the United Nations Office on Drugs and Crime, UNODC, estimates that between 2 and 5% of global GDP is laundered each year. And so that equates to between euro 715 billion and 1.87 trillion each year. So what is that telling us? At a very practical, so that's kind of the big picture backdrop, if you like. But what can RegTech bring, and how can it bring it? And a recent use case that I saw was a parallel trial that was looking at regulatory obligations, and they did a manual process side by side with a RegTech process. The manual process took 1,800 man hours, and the RegTech process was able to achieve the same result in 2.5 minutes. However, there are barriers, and that's one of the things that we're going to talk about today, opportunities and barriers. We did a recent survey, and 60% of RegTech founders said that procurement was the biggest stumbling block. The time to value from first conversation to be able to deploy RegTech for tier 1 and tier 2 financial services is nearly 14 months, which indicates a very long sales cycle. And this long sales cycle and the speed at which solutions can get to institutions creates a bit of a knock-on effect for investment into the sector, because a long sales cycle is not necessarily aligned with venture capital in terms of their investment horizon. And also what we are seeing as well is that since the pandemic has taken hold, 41% of our survey respondents also said there had been some deferral of POCs and trials. And POCs and trials are the very lifeblood of RegTech and how we trial and test what it is that we do. So what we know is the opportunity is great. The speed of crime, as an example, is high. The fines for non-compliance are high. How do we speed up adoption? What role do regulators play? What about the banks themselves? What are they doing? And what impact does this have on startups and technology firms? How can we collaborate? And are things getting easier or harder? Well, we're about to hear a very contemporary view from our panel on their experiences right now. So I might start with Benedicte, if that's okay. So from your perspective, what are some of the environmental drivers from a regulatory perspective, and what are central banks doing right now, Benedicte?
Yeah, so I don't want to, let's say, first of all my comments are in personal capacity, and I don't want to speak in general for all the central banks, so to say. But in Hong Kong, for example, there is an ongoing RegTech survey right now being coordinated by KPMG. So, and the intention is to actually find out from the banks how much progress they're actually making on this topic, which types of RegTech they are deploying. As you mentioned, Deborah, RegTech is a very broad topic. In fact, there isn't just one type. And when I last looked at it, I feel that the sector is very much dominated by the AML CTF solutions. And in fact, I think that makes total sense in view of the numbers that you've mentioned. It is an area that can more easily be automated. It has a longer history of being automated. And automation can definitely increase the accuracy, in this case, the ability to find crime. So in terms of the regulatory impetus, I would say it's always been there, but I think there has been a lot more RegTech innovation actually in the last 5 to 10 years. And that innovation has drawn the attention of the regulators, who in turn have been trying to understand, do these things actually work better maybe than human checks? And that is the case, for example, for eKYC. In certain cases, it is viewed to work actually more solidly and with less error. So for electronic onboarding and digital identity. And it is the same probably for the whole of the AML surveillance space. So that's the point of view of let's say, where the regulators are coming from.
Okay, thank you. And what about, Rajeev, what about from a bank perspective? What are the banks and financial institutions, and given your APAC brief as well, has this current pandemic actually allowed the banks to take stock, and do you think that this will drive more technology adoption, in particular around RegTech?
So, what I would say is that one of several expensive lessons that, from the global financial crisis back in 2008 is building banks' capital is not optional, it's now a requirement. And, as we've sort of progressed forward, the other lessons is including the speed at which financial systems plumbing has, become clogged, and now regulators really have taken stock of the system and imposed some stringent requirements, some capital requirements. We heard from Benedicte around the anti-money laundering, the KYC. What we've seen, broadly speaking in the industry is the senior risk managers really are leaning on data analytics and the quality of data, predictive analytics scenarios, and I will use the term to some extent supercharging some projects in terms of becoming much more agile to provide risk managers with the data to make some informed decisions. So that's definitely coming in place. So we saw this particularly in what I call sort of the first line of defense regulatory requirements around whether it's cash flow obligations, managing across different spectrums of risk. That's definitely come front and foremost, and has become really priority. And what we're seeing, and someone can argue that this was pre-COVID efforts, is really partnering with also some of the regulators to really collaborate and understand what are some of the goalposts, what are the requirements, what automation efforts are possible, internally looking within the house, in terms of the client experience, the digitization, how that continues with a controlled risk framework. So, for example, it was mentioned earlier around the electronic signing of documents. I think that's something that we as an industry saw that front and center, how that became important, from a KYC perspective and an AML perspective as well. So therefore, I think just going back to the question around adoption, RegTech adoption is here to stay. I think it's not so much about why of the adoption, it's more, it's closer to the how and the when, which is critical depending on, each individual organization's place in the life cycle of their, technology adoption. And at what stage on that spectrum do you actually push that turbocharge button to make the additional investment in technology?
Yes, indeed. I think that will be music to Rajesh and Jenna's ears coming from the technology side. They love to hear when a bank is supercharging. Isn't that true, Rajesh? We might move over to you on that point.
Yes.
Rajesh, already you have an amazing array of global clients in the RegTech space. And I know that you still identify very much with being a startup because of the dynamic nature of RegTech and how it's reinventing itself and the speed at which you need to adapt to new regulations, new compliance requirements, and an increased appetite. So have you seen the dynamics? Have you seen the dynamics change? And have you seen the dynamics change? And with this impressive array of clients that you've already got, what's the current importance of being able to my earlier point about being able to react so dynamically in this very fast-moving environment?
I'll take that point from defining, why we feel as a startup, and then explain on terms of how we need to be agile in terms of adapting to client requiremends.
Yes.
So pretty much we've been one of the pioneers in this field, and what we've seen is earlier RegTech was a silo system. It was on the back end, a few CPUs allocated to that. Nobody from IT would rather attend those meetings because they knew they can just spare a server. But nowadays, RegTech has become a much larger space from a bank's perspective of importance. These are committees discussed in the board meetings and things like that. So it has assumed a lot of more importance, rightly so, given the circumstances. And what's changed from then to now is that RegTech 1.0, as I call it, was a silo-based system. Typically name checks and then you had transaction scanning coming through. RegTech 2.0, as we call it, was the integration of these systems to arrive at some sort of a case management. And because reporting to the regulators in standardized formats was the norm. Now what's happened is that with the increase in the digital transactions, I've seen banks that have typically had about 3% of digital transactions 4 years back, and today they have about 56% or so, at least one client I've seen, whose transactions are completely digital. And these are banks that never looked at adoption of digital as being a necessity. It just happened.
Yes.
So what's now happened is that the RegTech 3.0 has come in, where you look at avoiding any bit of a manual intervention in the RegTech compliance space. You look at artificial intelligence and machine learning coming in. And where is this important? If we look at the changing needs, like Benedicte highlighted, eKYC is a very important aspect that's come in. With the social distancing and COVID situation, most clients are now getting onboarded digitally because branch footfall has reduced. And so when you look at the RegTech compliance from a KYC perspective of name checks or transaction monitoring, all of that needs to be certainly automated, and not just automated from a perspective of single systems, but bring in complex logic to sort of arrive at what we term as contextual RegTech. It is the context in which you got to see it, whether it's a digital transaction of onboarding, or is it a transaction from a trade-based system and things like that. So that's something that's definitely changed. And as a partner to banks in terms of providing RegTech solutions, where we see us coming in is to adapt in terms of being very agile to these new needs. I'll give you a quick example here, is that sometimes you digress from just anti-money laundering to sort of anti-fraud as well. One of the examples I can give you is that, you know, with the COVID aspect coming in, there were a lot of people who were conducting fraud. I should say some people, because when I say a lot, it seems like majority. A few perpetrators were conducting fraud where they would provide numbers to say that, you know, click this number to contribute for COVID-19 charities. These were all phishing links. These were wrong links given. So what we quickly did for one of the banks and a few banks in that region was to say that were there accounts with, let's say, for example, a common mobile number, but in different accounts. Because what they did is that gave the same mobile number, but the transfers were being different to different accounts. So they could not make out that there's one account having a lot of activity. So this was this network built to sort of enable money laundering to happen. But if you look at it in a way, it was also anti-fraud. It was a fraud happening. So these were times when we've had to quickly react. It's also happened where on digital transactions, the IDs on which the amounts were to be credited for charity were suddenly similar memes were created. Like, for example, you would have in India, for example, we have PM Cares, which is the account for the Prime Minister's COVID relief fund. And there they had accounts like PMS Care, PM Care, and things like that. So there were quick decisions made by the regulator to say that these accounts need to be, you know, sort of specially designated to keep them out. They were hotlisted to make sure that they were not allowed to get funds in. So those are some of the things that we've had to do very quickly within a matter of hours rather than days. And I think that's something that we continue to do in this largely digital world as we see it now. Not just because of what we see as devices and technology moving up, but also the circumstances of being socially distant.
Yeah, absolutely. And I think that that's one of the hallmarks of great RegTech, that it is able to be so responsive right now. So we might move on to Jenna. Thank you. So you're involved in a number of early stage initiatives, and Fort Ninja is in fact a startup. So in the current pandemic, you know, is the pandemic helping or hindering startups in the RegTech space? And what do you think are the key challenges and pressures right now that may be impacting startups?
Thanks, Deborah. I think it is it is quite a difficult time because of number of things, right? First is there is a huge shift on the need basis. So on a macro point of view, the need of the country, need of the people and businesses and regulators and fintech and FI have changed tremendously. And that also caused business models to change. So I would say that it's a little bit of in three buckets. One bucket is it tremendously helps some of the startups. Second bucket is it is just a maintained basis. And the third one is some startups disappear overnight because their business models either become redundant or they're just non-existent because there's too much cost going on and they couldn't fundraise, for example, in this time of need. So the first bucket is for those startups who've actually fundraised in the correct timing, or they've completed the fundraising, or still fundraising ongoing, or they have existing customers. I think they're doing good. And the second one, maintaining, meaning that they have an existing client base, for example, and then they're just maintaining as it is. So there are a few causes towards this. So for example, eKYC, it is implemented in many countries in Asia Pacific. So recently in Malaysia, it's just announced by Central Bank Malaysia, the eKYC is going forward. I think there's a lot of talks on digital identity as well that is following from Singapore and Hong Kong and Australia as well. So for startups who are going to a very important need, I think because they prepare for it, they did the fundraising and they prepared the technology and user base, I think that's where luck comes in, right? So luck means preparation and opportunity comes together. So for those RegTech, I think they're in an interesting spot because they're actually addressing a very important need. I guess the other part is where some of them have also existing clients like Rajesh, where they have existing bank clients. So it means that they're in the good books. They've had a runway. So in a way, like their credits system with the relationship with the clients are all good, including the regulators. So for example, recently, so this is not specifically for RegTech, recently in Malaysia, our stock exchange have experimented on blockchain project on the bonds market. And it's taking a few, two regulators, our Securities Commission and Stock Exchange, Bursa Malaysia, on blockchain and bonds market. So for those, it's very enlightening where fintech regulations encourages fintech models to be experimented, but then with fintech models being created, facilitated, and regulated, it also brings about RegTech, which comes in. So I think it's very enlightening to see a lot of regulators around Asia Pacific and banks championing it. And also, I would like to tap on to the government side as well. There's quite a lot of government, especially from Australia side, where they're actually issuing out challenges. So both government and FI are issuing out specific challenges, and I think that's very encouraging. And they're welcoming onboarding startups. And onto your note on procurement, I think because of COVID, I think government and regulators are taking notice of this is a dire need to speed up procurement. So I think it is a good time to be here. As a startup, we are technically born with the pandemic. And I think it really depends on the founders and startup, even investors, to really fit a real need that they're trying to solve as a startup. So back to you, Deborah.
Thank you, Jenna. Very insightful points that you made. So we've kind of covered off some data and we've talked about some environmental stuff. And I think maybe we get now down to working out where to now and whether we've actually answered our original question, and that is, have the dynamics of this relationship changed? So one of the big initiatives that was launched just recently was the G20 BIS Tech Sprint. And I'm wondering if I could ask Benedicte to tell us a little bit about what was the impetus for developing this program, and what are the hopeful outcomes to the whole community of this tech sprint?
Yeah, so this tech sprint was the result of the G20 focus on the topic of both RegTech and also SupTech. And you're right. It is new. It's the first time I think that something like that happened. And I would say that the focus is more on the subtech side, which is supervisory technology that the central bank supervisors can use to ensure that they can meet their statutory targets, so to say, including, most importantly, financial stability. So this specific G20 and BIS Innovation Hub tech sprint set out 3 problem statements. One was I would say a very straightforward one, which is that for regulators to automate regulation and to deliver it in more digestible format that is automated. That was one of the problem statements. I would say there are a series of startups in this field. So this is an area where the startups had, as Jenna just said, it comes together. They have their product and the opportunity. So of course, there's a lot of applications for that problem statement. The second problem statement concerned actually a whole new market, the market of tokenization, and how you monitor this. And this, of course, is against the backdrops that tokenization is happening, and it's happening of different kinds of assets. We know they're the crypto assets, but there are also efforts on securities tokenization, one of which, in fact, the BIS Center in Switzerland is announced to be working on. And then the third is, of course, there is the tokenization of money, right? So that in turn interlinks as well with the topic of CBDC, central bank digital currency, which is, as we all know, is quite firmly on the agenda of research, so to say, in terms of feasibility of the central banks. So for that problem statement, the interesting bit is that the experience is actually in the startup sector, because the crypto experience is very specific to the startup sector. It is in fact to a large extent absent in both the banks and consequently in the central banks. And I would note that, in fact, what I learned from having been in that sector is a little bit, again, towards what Jenna was saying, is if you have new startups, new fintechs, this was a whole new group of crypto fintechs. If they're born, then RegTech follows. So in fact, a lot of the eKYC solutions and the best ones you now have in the market, that frankly, suddenly with COVID, the banks are saying, maybe I should start using this. And where the neobanks are already using it, in fact, they were born because of the very big global crypto businesses. So I worked for one of these, and they were using one of the solutions that one of the neobanks I later worked for is now using, okay? And that now that same bank is going to be looking at and say, in fact, would that be a better experience than to do my old-fashioned onboarding system, so to say. So that was the second problem statement. And the third was actually linked to COVID. And it was with the specific, let's say, intention that for COVID, you can see there's a lot of innovation that is being driven with AI, right? Is the monitoring, the mapping, etc., the prediction. But let's say that problem set was trying to cross over to finance predictably, right? How you can use those data to actually predict impact on financial stability. So I would say that it's highly likely that no startup actually had a ready-made product. So in a sense, what Jenna says is it's about, is the startup existent at the right time? And so as said, to summarize, I think that startups in the fintech sector actually have caused the blooming of the startups in the RegTech sector. I think now the banks are realizing that in fact, some of the fintech sector is a lot more savvy. And so they're saying, okay, let us be as savvy, as fast in onboarding. Let us onboard in 5 minutes as opposed to in many, many months, right? And now the last maybe cycle of this evolution is the central banks and the regulators saying, well, so what of this RegTech evolution can we use in terms of subtech? So that's where we stand, and that's the context of that tech sprint.
Yeah, that's a fantastic. Well, it's a fantastic program, and I know that we we collaborated in order to get applications and things there. Yes, fantastic program. And this is what we're talking about, is how is the ecosystem collaborating, which then goes to the very question that we're trying to answer today. Thank you, Benedicte.
Maybe I should selfishly add one thing. Sure. Is that on Monday, actually, out of my VIS Innovation Hub here in Hong Kong, we just issued a tech challenge in the trade finance sector, and in fact, many of the problems pertain to credit risk evaluation, and specifically for the SME sector. As we know, this is an underserved sector for a very long time in the banking space. Banks are trying to definitely work with better credit modeling approaches, but equivalently so, there are many startups who are using alternative data, and these could be a bridge to the banking sector, and there's certainly a bridge right now that the e-commerce sector is increasingly using for credit extension. So that's one of the problem statements there. The other problem statement pertains to corporate onboarding, which in fact is a lot more difficult to digitize than individual onboarding. So individual onboarding, by now, you have a series of well-established startups, but for corporate onboarding, it's just more complex. But there are startups.
I'm probably going to have to move on. I'm sorry, but they're very good. They're very good points, though, around corporate onboarding, and perhaps that's going to be. What I might do is round back out to that before we finish up. Sorry to cut you off. Okay, Rajeev. So how do you think we can get financial institutions more alive to procurement, as a barrier? And have you seen particular innovation internally at Citi on your approach to onboarding startup tech?
So look, I think, and the point was brought up earlier as well, is that the good news is that, as mentioned, there are many dimensions of RegTech and FinTech, and perhaps they're joining at the hip. So there are various work streams that can be addressed in parallel, which will really allow the RegTechs to have a seat at the table. As Benedicte was talking about, I think briefly on the credit side, for instance, the whole concept of what we call predictive analytics, where you're looking at, let's say, credit officers who are assessing credit worthiness of counterparties, being able to actually bring some of that predictive analytics, earlier into the life cycle, in front of some of the risk managers who are managing these relationships. I found, again, going back to the terminology I used on turbocharging, I think that's where we've seen a lot of, headway. The other areas, I would say, for instance, within the term tech and legal tech also have come in, where there's been a lot of advancement with regards to getting documentation in front of clients, sort of off the shelf, documentation, which has, from a front to back perspective, really continued to sustain good customer experience. So the way I look at it, there are different models in place. Either we continue to partner with FinTech and RegTechs. We either invest in RegTechs and learn more about the space, which is a good way to hedge some of our downside potential from any disruption. There's also, a model where, potentially banks are transforming ourselves to be more like a RegTech. So you're seeing, building your own sort of in-house FinTech. So you have innovation labs where we've got case studies that are going out there, and within the market space, some thought leadership around what is the problem statement, and leveraging off talent in-house. So there is that happening. And then, there's also that ignore the FinTechs, which again, the competition is rare to take that choice, but I think there are certain businesses that are built on those moats, and typically they end up being regulatory in nature. They're difficult to disrupt because certain market participants are playing in a very narrow market. So we're seeing a sort of a broad spectrum, but just going back to my opening statement, I think the good news is that there are several parallel work streams, and there are upsides for RegTechs, depending on sort of, how mature that particular RegTech is within that space. So we're certainly looking at kind of a hybrid model where we're looking in-house, where we've strategically invested, but then at the same time, looking definitely at solutions like eKYC, looking at AML, looking at legal for documentation, straight through processing, definitely looking at fintech solutions for that.
Yeah, that's great to hear, and that would be our experience as well. We see a lot of a hybrid approach, some being developed in-house and some being procured outside for sure. So I'm just mindful of time, and Rajesh and Jenna, I've got one more question for both of you, but if you could keep your responses short so that I don't get into trouble with the conveners. Rajesh, can you give us a really short practical example of a RegTech deployment that you've done during COVID? And perhaps you answered this a little bit before, but that's managed many challenges and the good, the bad, the ugly. And then finally, because we're getting towards the point in, could you then just give me one sentence on whether you support the notion that the relationship with financial institutions is being redefined right now as we see it? Over to you. Thank you.
Yes. I think in terms of typical deployments, yes, we've had to deploy quite a few clients with updates on the RegTech because that's this stream that has really not gone offline in the whole COVID situation. It's in fact become more important. So there are areas like automated regulatory reporting and things like the trade-based money laundering prevention and especially the eKYC with the digital onboarding and the onboarding of corporate clients. These are some of the key areas that have come up. Another key area that has been a focus is the reduction of false positives using artificial intelligence. Yes. I think these are all pertinent for startups to take up because while they are individual use cases, I think it's for a startup, these are good case studies to take up. I think the difficulty that startups will face, like you highlighted in the beginning, was that they would not be allowed to conduct POCs at this point in time because you need physical access, VPNs, etc. It's pretty much the challenge we've had is to have access to systems remotely. But yes, because we've been incumbents and we have implementations and we are a trusted partner, we do get access, remote access, secure remote access, and we are able to conduct our work. So we've had, with our almost 300 customers in the RegTech space, we've been able to conduct work smoothly with no exceptions so far. The updates that the regulators have sought in terms of details on specific instances, those queries have come across. We've given the updates and being able to install them remotely. So yeah, it's. I wouldn't say it's been smooth sailing. It's been a lot of hard work, but I think there are ways in which banks have learned to adopt and adapt to this new scenario and sort of allow partners to have access to the beta testing environment, if not the production. So that's been the area.
Certainly a great example of a RegTech firm. Certainly in my experience, I see a lot of RegTech firms. You're a great example of a RegTech firm. Now I might need to move on to Jenna now. Jenna, you work with counterparts across Asia regularly, and I know you're involved in an education initiative and in the local FinTech Association, as you've spoken of. What do you actually hope to achieve through this advocacy work that you're doing?
So initially, when I was part of driving digital economy for FinTech, I struggled to build my team like 5 years ago. So I think talent capacity building is still very much not covered yet in terms of scalability and in terms of feeding the need of innovation and digitalization. So this is my personal point of view. I think if we do not put in effort and to put in effort to scale FinTech talents or talents that we need for innovation at FI or even RegTech, I think that it could pose systemic risks in the long term and very subtly. So that's my point of view, that I want to pave way and kickstart rallying the best minds to curate the best content to kickstart the formation of the next generation talent, or the talent that we all need here in building what's next for RegTech and FinTech for the future. So yeah, I think that sums up what I'm trying to do, Deborah.
And so do you think that with your work in advocacy with the associations and things, do you think that that's actually benefited your business and your initiatives, as a whole, to help the connected community and so on and so forth? Do you think that that's helped?
I think associations are doing their part, but I think we need a lot more from everyone else. So if everyone else is putting their 5%, but if everyone put another 10% more, I think it'd be really helpful, especially with this pandemic. We need to be a little bit creative. So what we did was every successful graduate for working professionals do not need to pay a single cent. It's all backed by corporates, and that's what we have managed to tweak during this pandemic. So we're just doing our little best to build a community, and I think the association is doing their best. Everyone is trying to do what they can, but I think we need to do a little bit more because the innovation is increasing at a speed of light actually right now. Yeah. And so now I think it's very timely to put our feet to actually build the talent that we need, not just existing talent, but the next generation that we need to strive forward. Thank you, Deborah.
Yeah, so then you would say that just to wrap this conversation up then, so you would say that the relationship between financial institutions and startups is redefined. It does look different now.
Yes, it's definitely different now, and it's quite positive, I would say, because I think the need, so before this, there's so much noise and there's a huge fog. So right now, I think with pandemic, people are zooming on to the real needs, and I think people are having more conversations and exploration as well. So I think it is definitely being redefined.
Yeah, great. Thanks, Jenna. And what about you, Rajeev? Can I throw to you and say, so asking you the question, do you believe that the bank and startup relationship has been redefined and will continue to be redefined?
I definitely think that it has been redefined, and I think it becomes imperative to view just data as an asset class on its own. I think pre-crisis, there were always questions around the element of trust in data. What seems very apparent is that senior managers now, the element of trust has moved along that spectrum, and it continues to be imperative. The one thing I would say, and I know we haven't covered it in too much detail, is that in addition to procurement being a challenge, I would also say data privacy continues to be a question that gets raised. So definitely redefined, making lots of progress with still questions around, privacy and governance.
Yes, indeed. And Benedicte, what about you? Do you believe that it has been redefined, the relationship between financial institutions, banks, and startups?
I certainly think so. I think it was already being redefined before this crisis, this COVID crisis. But with COVID, it's gotten a lot faster. And the other thing is, to be frank, we can have an event like this without needing to travel. And this kind of sharing, this kind of an event, it speeds up this evolution as well. I mean, before maybe Rajesh would be thinking about when can I go see this customer in this other country. And now we're having this discussion across many different countries, right? I mean, 91 countries the people come from who have signed up, but even amongst us, it's probably 4 or 5 locations, right? So I think the dialogue has sped up, the need has sped up with COVID immensely. But I would say that we have highlighted, Rajeev and myself, as being the key area around e-signature and e-KYC. Those ones really were the fastest to take off. But a number of the other things like cybersecurity, which Jenna's startup is in that territory, it follows. The moment you have that, you have this. Yeah. So I think it's totally redefined, and to be frank, I think it will just continue. It is a competitive necessity, I think.
Yes, that's right. And I couldn't agree with you more. I mean, what you were saying before, where you've got fintech, then you have RegTech, and where you have fintech and RegTech, you're going to have cybersecurity, right? So that everything is, moving as one, actually. So we do actually have a question. And I'll throw this open to whoever would like to take it from the panel. It is from Jack Lee. And Jack asks, what would be the top use case for blockchain in fintech, regtech area at the moment? Would somebody like to take that?
So can I take that from a perspective
Yes,
of how
absolutely.
we've been looking at it? I think eKYC is certainly one that makes a lot of sense for blockchain to take up, from the fact that a lot of countries are now looking at central KYC, because the whole aspect of banks having to deal with disparate sources of the same client and same ID proofs, etc., and the same technology to scan it, and surprisingly coming with different results in each bank as well. That can really be made out and done away with having a central KYC probably sponsored by the government or the regulator. And I think there the eKYC is a perfect example or a use case for the use of blockchain.
Okay, that's fantastic. Hopefully that helped you, Jack. So what I might do is just do a bit of wrapping up, and so I think we were unanimous in that the question, how is the bank financial institution relationships with startups being redefined? And I think our panelists are all in full agreement there. It is being redefined, and in fact it's actively, I think that it is being redefined every day as we are moving through the stages of this pandemic right now. But some of the four things that I took out of this, you know, there is challenges for startups right now in their business models, their ability to attract capital and their ability to attract clients, for sure. I think we heard from Rajesh loud and clear, RegTech is on the rise, and there are a lot of opportunities. I think to Benedicte's points, you know, collaboration with regulators is key, and there's a lot of great work being done right now. And finally, on Rajeev's point about, I love this term supercharging. I hope you don't mind if I start stealing that, but this idea of supercharging projects right now will create a lot of opportunities, and the only gap is how we come together, and formats and programs like this today help us to do so. So I want to thank all of my panelists, Benedicte, Jenna, Rajeev and Rajesh. Thank you so much. And to the virtual FinTech Fair conveners, thank you very much for having us. And I think that takes us right to time. Thank you very much.
Thank you.